Good evening, everyone. My name is Alana Brown, and this is Josh Henriksen, and we are here with Neighbors Group and Solo401k.com. Today, we have a great presentation for you all about self-employment tax deductions. Before we jump in, let's do a quick little tech check. I see that we're live on Facebook. That's awesome. So if you're here in Facebook, just comment whether you can hear us and see us. And if you're live here in Crowdcast, down there, somewhere down there, it says say something nice. Go ahead and let us know. Can you hear us? Can you see us?
And as we kind of wind up, I want to go over some of the best ways for you to get any support needed. Just now sharing 3 great links right in chat. I'll put it in Facebook as well. But first way to get support, let me pull up my screen real quick. All right. Lana, can you see that?
Yep, I can.
Great. So first way is our Facebook group. May already be in here, Self-Directed Heroes. Alana and I are both in here, the team as well, posting, answering questions. So just a great place to get help if needed. Second way is going to be our support.solo401k.com. And again, just a great resource. It is searchable. All you need to do, head to support.solo401k.com. So you want to look up info on rollovers. Just type in rollovers, and you'll have tons of great articles with info. Last but not least, solo401k.com, our website. Excellent resource for information. Check out our blog, learn, click the blog, posting weekly, new articles, new info coming out all the time. Okay. So again, three great ways to get help when needed. I'm putting them in Facebook as well. And there we go.
Perfect. And it looks like everyone can see us and hear us. Thank you. And we are so happy to be here. So you're very welcome. So let's jump into the presentation.
All right. So on today's talk, saving money by maximizing self-employment tax deductions. Quick disclaimer, we are not a replacement for your CPA or attorneys. We are your IRS document plan providers. We've been doing this for 18 years, so we have a wealth of knowledge to try and make the process as simple as possible. We know retirement plans can be confusing, so we're here to help. But when it comes to tax or legal advice, be sure to refer to your CPA and or attorney. Neighbors Group was started in 2006 and remains the industry leader in fully self-directed retirement plans, like our Solo 401k and our checkbook IRA. Here at Neighbors Group, we not only preach the power of the Solo 401k, but we practice it as well. We all have our own Solo 401ks, and I know for Alana and myself, I'm sure others as well, we implement the tips and tricks that you hear us talking about. It's hard not to take advantage when contributions allow a deduction of up to $61,000 a year. Today we'll cover what does it mean to be self-employed? What are self-employment taxes, self-employment tax deductions, and go over some best practices. So what does it mean to be self-employed? Well, self-employed person does not work for a specific employer. You work for yourself. Self-employed individuals or independent contractors earn income by contracting with a trade or business directly. Whether you're a sole proprietor, an LLC, an S Corp, or even a C Corp, you're technically self-employed. With the gig economy gaining traction like it is, whether it's like ride-sharing services, freelance work, coaching, tutoring, fitness training, as well as the rise in platforms like Upward or Thumbtack, just to make it easy finding side gigs. It's giving people greater flexibility in their workday, which obviously a lot of people are searching for. The pandemic also triggered a huge rise in gig workers. With the population at 332 million, 59 million people performed freelance work in 2020 and 2021, and obviously continues to grow. Freelancers expected to grow to 86 million by 2028. According to a Dartmouth study, when they asked participants if you were able to choose between being employed or self-employed, which one did you choose? 70.8% of people choose being self-employed. These data points indicate a roughly 10-to-1 ratio of Americans who want to be self-employed versus those that actually are, which is pretty a shocking difference. Where's the disconnect here? Maybe people don't know where to start when it comes to being self-employed. Maybe people are scared to take a leap. I think we all foresee the self-employment rise stats will continue to grow dramatically. So why do people strive to be self-employed? Whether they're looking to take control of their future, maybe they want to take control of their work-life balance, or not have somebody in the way of them making more money. You want to be your own boss and do what you love. So when given the chance, people choose the ability to make more money and have more flexibility in the workplace. No more rush hour, spend more time with family, choose your work environment, even choose your own clients. And add in the stability that's created when you can contribute far more to certain retirement plans when you're self-employed than if you are not. It's no wonder why the self-employment rate's skyrocketing.
Awesome. Thank you, Josh. Very eye-opening. I know for me personally, I know so many more employed people in my own personal life than ever before. So really great. So let's dive into the not so fun, but important stuff, taxes. As self-employed people, we have self-employment taxes. What it is 15.3%. The breakdown is Social Security at 12.4%, Medicare at 2.9%. Remember, this is in addition to your income taxes. That's because you're an employer, even to yourself. Self-employment taxes are the small business version of paying what traditional larger employees pay. So one big difference between self-employment tax and payroll taxes is that with a regular job, your employer pays half. So it's split up like this. You're going to pay 7.65%, and then your employer pays the other 7.65%. So that's the Social Security and Medicare. When you're self-employed, your rate is the full amount. So it's 15.3%. But wait, you can actually deduct half of your self-employment taxes, which means you're essentially at the same place as someone that has a full-time W-2 job somewhere beyond their own small business. On top of it, we're going to go over some really great deductions. Someone that is not self-employed does not get these deductions. So you're probably paying less in taxes. So now we're transitioning to your income taxes. So remember, you have self-employment taxes and then income taxes. So we take a look at this chart. Let's say you're making $200,000 a year. $200,000, 32%. Ouch, that seems really high. But that's not how it's calculated. So it's a marginal tax rate. So if you take that $200,000 a year, the first $9,950 is taxed at 10%. From there, anything under $40,525, 12%, etc. So you get the point there. So when you do take that $200,000 a year number, you're really going to pay $44,827. And that really gets you closer to about the 32%. Oh, excuse me, not the 32. It's closer to the 22.4%. So much different. And remember, guys, this is in addition to your self-employment taxes. Let's take a look at a calculator. Let's start with that $200,000 number that we've been playing around with. Let's estimate the taxes. So at $200,000 a year, you're paying 42%, which is $84,000. That seems like a lot. Let's take some deductions though, and see where we can get that number to. So you're deducting travel, health insurance, all other business expenses. And if you got yourself down to $150,000, but wait, you've made your contribution to your solo 401k. So now you're down to, let's call it $120,000. Let's take a look at the original number, 42% at about $84,000 for that year in taxes. Now we're almost at half the amount. So we're at about 41,000, a little more, and you're at 35%. So this is why deductions are so important. You are bringing your taxes way down. So I showed you how much you can save in taxes by getting your appropriate deductions. So let's talk a little bit more about deductions. The IRS requires two elements. An expense needs to be ordinary and necessary. What does that mean? So ordinary, that means it's common and accepted in your industry. Necessary, it's helpful and appropriate for your business. So let's say you attend a national marketing conference for your marketing business, and you stay at the Ritz-Carlton. It's $2,000 a night. Is this expense allowed? Yeah, it is necessary to stay at a hotel, but is it ordinary to stay at the Ritz-Carlton? I don't know. I don't know about your business. Is that conference in a place where there's only a Ritz-Carlton? Then maybe it's justifiable. But it really depends. Unfortunately, the tax code doesn't define either ordinary or necessary. So working with your CPA is incredibly important. Another example, a little more simpler. You're a photographer and you need a new camera for your business. I'd say that's ordinary and necessary. But of course, you guys, you have to prove these two elements. Here are some of the really popular business deductions. These are not all of them. So let's go over them. Home office and office supplies. So if you need office supplies for your business, that is tax deductible. When it comes to home office, there's a simplified option. For that, it's $5 per square foot for your home office, but it maxes out at 300 square feet. So the max deduction there will be $1,500. When it comes to internet and phone bills, I know every one of you is using the internet and your phone for your small business. So the entire bill is a deduction. When it comes to health insurance, so your medical and dental insurance premiums for you, your spouse, your dependents, and any children younger than 27 is actually tax deductible. When it comes to marketing and advertising, If it pertains to your business, that is another expense. This is an interesting one. So continuing education. So it obviously has to apply to your current business, not a new business, but it can't be for a new skill. It's actually to improve and maintain your current skills. So it's great if you want to learn a new skill for your business and go for it. You absolutely should, but it's not a deduction on your taxes. So I know that seems a little silly, but the IRS has its rules and we follow the IRS rules. When it comes to travel, flights, hotels, taxis, food, yes, that is all a deductible business expense. It just has to be legitimate. If you don't want to keep every receipt for your meals, there's actually a daily food allowance. The General Service Administration, it's the GSA website, and Josh is going to post that for you guys. So that's a nice way. I know receipts can be very cumbersome and a lot of them. So if you want to take advantage of that more simpler way to deduct, go for it. When it comes to memberships, professional organizations, legal fees, of course, if it pertains to your business, that is the big theme here. It must pertain to your business. For the last three, we're going to go a little more in depth. Self-employment taxes as a deduction. This is really great. I know when I first became self-employed, this is what made me so nervous, is it felt like it was a very heavy tax burden. But when it comes down to it, like I said earlier, it's really the same if you're being employed from a big company. So you get to deduct half of your self-employment taxes. Example, back to that $200,000 a year in self-employment income. 15.3% of that is going to be $30,600. Half of that, which is your deduction, is $15,300. That's pretty big. Startup costs. So this one's a little different. So this is the cost to get your business up and running before it opens. The max deduction is $5,000 for startup costs and $5,000 for organizational costs, but only if your startup costs less than $50,000. So you spent $52,000 for your startup costs. You can only deduct $3,000 of that. I took the $5,000 that's allowable. I minus the $2,000 because that was the excess. And what's deductible is $3,000. You can amortize the other $2,000 in later years. So if you've spent $55,000 for startup, you don't get any deductions for that year. But later on, you can take that $5,000 deduction in later years.
Okay, now the reason we've all gathered, one of the simplest and quickest deductions, retirement plan contributions. There's many different retirement options, but some may be more beneficial than others. The solo 401k, for example, allows for the highest contribution limits of any plan. The simple IRA maxes out at $14,000 per year. The SEP IRA and profit sharing plans both max out at $61,000 as well. You may be thinking the SEP, profit sharing, and solo 401k all have the same limit, which is technically true. But let's do some math. If we use that $200,000 per year figure, you'll see on this calculation that the solo 401k put away far more per year than the other plans. If you're comparing to a SEP IRA, you're limited to only the employer side at 25% of your net income. Even at $200,000 per year in income, you still wouldn't be able to max out the SEP or the profit sharing plan. Also, don't forget the solo 401k has a catch-up contribution of $6,500 if you're over 50. Simple IRAs allow a $3,000 catch-up, but the SEP and the profit sharing plan don't offer any. Keep in mind when calculating deductions that only pre-tax funds are tax deductible. Roth funds are not deductible. They're considered after-tax contributions. They do get the benefit, they don't get the benefit of the tax deduction. However, they do have the benefit of growing completely tax-free upon distributions. I'm sure you guys have seen our previous webinars all about Roth contributions, so we don't need to dive in that too heavy. So with the solo 401k having the highest contribution limits of any plan, the Neighbors Group plan giving you full control to invest in alternative assets, on top of being able to contribute both Roth and pre-tax funds, all while having access to up to $50,000 tax-free. I'm sure you can see why the solo 401k is one of the most powerful tools for retirement you can have at your disposal.
Yeah, it really is so powerful. And I know maybe Josh and I are a little biased because we are solo 401k specialists, but I know, and Josh, I'm sure you hear this all the time, when I get off of a call with someone that's not quite a client yet, but is about to onboard with us, they say to us, I cannot believe I haven't known about this. Where has this been? We hear that all the time.
All day long. World's best kept secret.
Yeah. Not for long. We're going to tell the world.
Agreed.
So some best practices. It's really important that if you don't have the paperwork, it didn't happen. So you're keeping your sales bills, paid bills, invoices, receipts, really, really important. You have to prove that these are ordinary and necessary. So having all the paper trail is very, very, very necessary. But the good news is it's 2022. There are so many different apps out there. The apps that are on this screen right now, they're actually apps that do cost money. But how much is your time worth? These are pretty incredible apps. Write a few of them down if you haven't played with any of these or you have no clue where to start. I definitely write some of these down. I'm sure there's some free trials on some of them. See what works best for you. Of course, you can go the free way. I mean, my first year being self-employed, I just used an Excel sheet and that was fine. It worked for me. I saved all my receipts on my phone, but it became a little more difficult in year 2 and 3. So I really like to use other items. Something that's cool too is I know with my own bank, so I have my own business credit card, really smart, keep it separate from your personal credit card, but they have some technology within my own banking app where they can actually categorize it for me. So really cool. See what your bank offers. If you're sick of doing Excel sheets, check out some of these apps. Absolutely worth it. The big takeaway, have a system in place in the beginning and make it a regular habit. So I have this friend, he's an interior decorator, and every year he does all of his expenses, deductions, everything right before tax time. So I remember walking into his house and he's at his dining room table and he must have had 1,000 receipts. That's his system. I think that's crazy. Maybe that works for other people, but with all these great tools, take advantage. And of course, I can't stress upon this even more. Have a competent CPA, accountant, tax professional. I have one. I know, deductions pretty well, but not well enough. I mean, I got my deductions a little too low last year. Then my CPA said to me, you can't contribute what you want to your solo 401k. So they helped me fix that. That's okay. Maybe you don't want to take a ton of deductions because you want that $61,000 contribution, which also in turn is another deduction. So what I'm trying to stress here is have that CPA, accountant, tax professional. They are absolutely going to save you money and make this much easier. Okay, let's have a little fun. Since we've been talking about taxes and taxes are not that fun, we are going to play a game. It is called deduction or no deduction. So Josh and I are going to read a phrase and you're going to let us know. So if you're here in Facebook, just comments. If you're here in Crowdcast, go ahead and put it where it says, say something nice. Let us know if it's a deduction or no deduction.
All right, first up, your mortgage on your primary residence Deduction or no deduction? Do we play the music?
Sing it, Josh. We should have had that pre-recorded.
Yeah, right? Just play it on a cell phone rather than. Okay, let me. All right, Rick, Shannon, thank you. Carrie, awesome. Darmendra, Michael, Patrick. We're getting lots of no's. No,
Good.
no.
Loving this.
No, perfect. Yes. A portion, Jason says. Interest only, deduction under over 24. Personally, partial. Great. Awesome, guys. Thanks so much for your answers. The answer is, drumroll, no. It is not a business tax deduction. It may be a deduction on your personal taxes, like some of you mentioned, so it's great, good catch. But as far as business expenses, which is kind of the topic, it is not. Good job, guys.
A little bit, yeah, that was a little bit of a tricky one. So great job. The next one, we'll make this one a little easier on you guys. Half your self-employment taxes, is that deductible or not deductible? Let us know.
Okay, let's keep an eye.
Got lots of yeses.
Yeah.
Patrick, Danny, Dharma, Manmohan, Gardy, Raha, James, Len. Everyone's doing great.
Rochelle, yes, perfect. Great.
Nag. I'm so glad everyone was paying attention to the presentation. You guys are all winners. Oh, we'll give them another second.
Yeah, they're coming in. That's awesome.
Yeah. Okay. You guys are all correct. Good job.
All right. Next up, $30,000 employer contribution to your solo 401k. Deduction or no deduction?
Let's see how smart our crowd is. And we do see you, Leo, in Facebook. You're doing great.
Galen, no. Darmendra, no. Brian, yes. Carrie, deduction. Danny, thanks so much. Yep. Great. Manmohan, deduction. Randy, deduction. Good job, guys. Maybe only 25% of salary. Deduction, no. All right. And great. No idea. Love it.
We like your honesty, Nag.
Right. Yeah, I love it. All right. So, and the answer, again, drum roll. Yes, that's a traditional contribution. You do get to write off the $30,000.
That is correct. So maybe it was a little tricky for you guys. Your employer contribution, it's always traditional. So when you're making traditional contributions to your solo 401k, tax deductible. Just like what Josh said earlier, there's one that's not tax deductible, but I feel like it might come up here soon. So I don't want to ruin that, which I may have already. Okay, you're a makeup artist and you want to learn how to do your own accounting. So you purchase an educational course. All right, guys, deduction or no deduction?
It's a little tricky one as well.
Indeed. Ooh, we got a lot of people coming in with the yes, and a no from Rochelle. No from Brian. Patrick, no.
See, I kind of expected this one with the mix back and forth. It's kind of a tricky one.
I like it.
Yep.
Give you guys another few seconds. We want everyone to play.
Also, shout out to Kevin and Leo on Facebook. Thanks so much, guys. We see you.
Okay, so it is not a deduction. She's a makeup artist and she wants to learn a new skill. So remember, guys, I said it's only to improve or to keep up on a current skill for your business. Now, it's really cool. If you want to do something like this, go for it. It might save you money in the end, and it's great to continue to educate yourself, but it's not a deduction.
Shout out to Patrick. Posted out of her area of expertise. Right on the nose. Great job.
Yeah, good job, everyone.
All right. Next up, Roth IRA or Roth 401k contributions. Deduction or no deduction? All right, quick one. Already said deduction. Monmon, no. Raja, no. Galen, no. Of course not. Carrie, no. Danny, no. Lots of no's. That's good. Good job, guys. So we'll jump through this one pretty quick. So it's great. No, Roth contributions, as covered earlier, are not a deduction. They're considered after-tax contributions. They do not get the benefit of a tax deduction. I know it sounds like it isn't really a benefit, but remember, you don't pay taxes on distributions. Taxes on the seed, not the harvest. Great job, guys.
Awesome. Yep. Advertising your business in the local paper. Deduction or no deduction? Who still reads the local paper? What is a paper? So any kind of advertising for your business, maybe it's on Instagram, maybe it's on Facebook. All right, we got a lot of yeses coming in. Oh, all the yeses, and they're coming in fast.
Yeah. Looks like we got some on Facebook as well. Perfect.
Well, you guys all nailed that one. Yes, it's for your business. So remember, if the expense is for your business and it's allowed, yes, deduction.
All right, next up, a speeding ticket, which incurred on the way to a work-related meeting. Deduction or no deduction?
I know the only speeding I do at work is going from my office to the kitchen for a snack.
Yeah, exactly. Same. I'm actually, thank you guys for answering. I'll let some more come in. I added this slide today. I was mainly just curious for myself. It's a busy morning.
Oh yeah, Josh? No speeding.
No speeding. Kidding. No, guys, it is not a deduction. I think we all kind of picked that up.
Yeah.
But great job.
All right, the next one. So you're on a business trip. Your spouse joined you. Is your spouse's meals deductible? Deduction or no deduction?
I got to bring up going Dutch. I feel like the IRS should look kindly on it, being frugal, but maybe not.
Well, I say, if you order a tomahawk steak, how many ounces is in one of those? Maybe you let your spouse have a few ounces off of that.
Split it right down the middle, take some leftovers. Yeah, exactly.
Get it? Yep. Patrick, you're on.
Great, Patrick. Exactly.
I'm all about that.
Only if your spouse is your employee and is part of the business trip. Great ad, Kevin.
I like that, Kevin. I love the additions there. So, okay. So if your spouse is not a part of the business, then your spouse's meal is not deductible. But if your spouse is a part of the business, possibly. You guys are in the business together, so you're both taking the deductions. Thanks for the follow-up, everyone. You're stumping us.
Yeah. That should be.
Yes.
All right. Next up, interest on your business credit card. deduction or no deduction.
I like this one.
Same. I actually didn't know this one, so I'm glad we're asking it. But great. On Mahan says yes. Galen, yes, yes, yes. Lots of yeses. Perfect. Great. Yes, yes. Awesome. So yes, the interest on your business credit card is a business expense. Lots of hidden deductions. You guys hit that one right on the nose, so that's great.
Yeah, we got a smart crowd out here.
Yeah. On the meal thing, quick question. Mahan, I'm going to add that to the question. We'll get right to it. Okay.
All right, so great job playing that game. You guys all get brand new cars if we were Oprah. But you just get a really good, fun education for tonight. That's your prize.
Yeah, exactly. Steak knives are coming, guys. Just be ready. So, not taking advantage of the high contribution limits offered by the solo 401k quite yet. Maybe you're wanting to get into the crypto space, but but want to be able to defer some potential taxes. Ready to get your retirement into your hands? Neighbors Group's ready to help along the way. You can head to solo401k.com to get started, or to schedule a time with one of our specialists like Alana and me. Already a Neighbors Group client? Did you know you can get paid for sending your friends or family our way? You can sign up for the program at solo401k.com/referrals. You'll get a custom link to use, and then you start making passive income from every user that signs up through that code. The links are already in the chat from earlier, but again, support.solo401k.com. Knowledge base, it's a huge database of information at your disposal. Our website, solo401k.com, and the blog has even more searchable info, as well as our live chat, where you can talk with Chelsea or Mercedes or Alana, myself. If you're already in the Facebook group, we're so happy to have you. If you haven't joined yet, you're missing out. Let's open it up for some questions. I'm going to be keeping an eye on Facebook. We already have some preloaded. Alana, I don't know if you want to dive in there.
Yeah, I'll start with the first one. So question from Anthony. What makes a self-employment entrepreneur? I'm a real estate investor with no employees. So great question. How to qualify for the solo 401k? What makes you self-employed? As long as you're showing self-employment income. So maybe you're a sole proprietor or an LLC, you're showing Schedule C income. As a real estate investor, you may only be showing Schedule E income. So that's what's really important to look at, Anthony. Where is your income falling? So you'll want to check in with that. There are different ways to show Schedule C income. So you'll want to work with your CPA. If you're an S Corp or C Corp, you're paying yourself W-2 wages. So you have to have that self-employment income. And yes, no employees, no full-time W-2 employees. You can have part-time W-2 employees. There are some restrictions there. And you could have unlimited 1099 contract workers. That is no problem. Great question, Anthony.
All right, come on, computer. Next up, Tim. I now have a conflict. Will there be a replay available? It's been asked a few times. Yes, absolutely. It'll be available with this link. We posted the link in chat as well. It'll be available on Facebook for replay on top of that. So if you do want to refer back or didn't get to catch it, absolutely available. All right.
Okay. The next question, I know we need some clarification. From Victor. You stated, how about if I'm both? If you can let us know what exactly your question is, that would be awesome. So we'll jump to the next one from Manmohan. So on the meal thing, didn't the IRS change the rules to not allow it? So it's my understanding that if your spouse is on a trip with you, she doesn't work for your business, your spouse's meals are not expensable. So that would not be a deduction.
All right. Leo from Facebook, what about technology, software and hardware for your business? Deductible or not? Does sound like it's necessary. You can prove it. So I'd say yes. Obviously check with your CPA as well, just to confirm, but it sounds like it's probably a write-off.
Great question. Okay. The next question comes from Rich and Rachel. I have a new Roth 401k. When I deposit after-tax dollars, is there a form to fill out when doing taxes? So great question. You don't have to report your Roth 401k contributions. My CPA always asks me for that because they want to keep records for me. So you do want to keep records. We have contribution forms, in your dashboard. I say utilize that. Let your CPA know that you've made Roth contributions. You want to make sure you made the right amount as well. So keeping your own internal documents about that is necessary, but there's nothing that you need to report to the IRS. Great question, guys.
All right. Any recommendations on CPAs who are well informed on self-directed IRAs and self-employment? Absolutely. I did post it in the chat earlier. I'm going to repost the link right now, Raja, but you can also go to solo401k.com/partners. You'll see the tab for partners, and that'll give you some great links as well. But let me just posted the link to our partner accountant page in chat. Thanks, Raja.
And then Manmohan, you said, I meant even your own meals are no longer deductible. No, they are still deductible.
I think Manmohan might be thinking about the change with being able to expense customers' meals. There was some stuff going on with that. So definitely work with your CPA on that, Manmohan, and just kind of work out the nitty-gritty. But as far as you and your wife, if she works for the business, it's still writable. All right, next up, Len, is there a teaching on non-recourse loans? We do have some information. You definitely want to work out with your bank provider. I know Solera, one of our partners, offers them, Titan as well. But as far as
we do have a training too. I'm going to grab it. I have a link. Yeah, we did it a few years ago.
Okay.
So let me grab it. It's actually in our old network. So you will have to sign into our old network to grab it. But it's really cool. Len, I'm going to post that here in Crowdcast and then also in Facebook. I know I learned a lot about this training because non-recourse loans, they're a bit different than your regular conventional loan.
All right, I do not have W-2 income, but for my stock trading, will I be self-employed? If yes, can I contribute to the solo 401k? So it really depends on how you're being taxed. Now, you need to be looking for active income. So if you're being taxed as like an LLC or a 1099 even, then yes, it would qualify. It does have to be shown as active income. Ilana, if you want to add on to that.
Yeah, there are different ways that you can be considered self-employed as a day trader or a stock trader. It depends. There's a lot of rules around it. I'm not sure about them, but definitely something to work with your CPA on how to make it your self-employment activity. So a little bit of a tricky question, but yes, consult with your CPA and see if you can get yourself qualified. Okay, I'll take the next one from Nick. My business is run out of my home. We had a whole home generator installed. Might this be considered in part a deduction given that it's for a business continuity? It might be. So, when it comes to, doing work on your house and you work from home, it's definitely something to talk to your CPA because maybe it'll go on your personal taxes instead. Maybe a piece of it can be put on your business taxes, but that's where it definitely pays to have a CPA. I mean, it pays in just so many different ways. So we definitely want to thank our CPAs out there for helping, our mutual clients with, figuring out these sometimes very complicated rules here. So Nick, I wish I had an exact answer for you. You'll definitely have to check in with your CPA.
All right. Patrice, I hope this has not already been asked. May have missed it. Can a car leased or purchased be deductible? So again, it kind of depends on what the car is being used for. If it's a business expense and you need it for your business, then technically, yes, it could be. Definitely confirm with your CPA. But again, if it's for a business expense and needed to operate the business, then it could potentially be deductible.
Yep. Great question. Great answer. I know a few people are asking if this is going to be recorded. If you guys just use the link that you use to get into Crowdcast or on Facebook, you can continue to watch it. This link will always have the recording here, so you can watch it whenever you'd like.
Jumping in real quick. Jardy, you can have up unlimited 1099 contractors. That is correct. Yeah, as long as there's no full-time W-2 employees working over 1,000 hours a year, that's the cutoff. But you can have 1 million 1099 contractors and still qualify.
And what's cool, Gardy, is that all your 1099 contractors, they probably qualify for a solo 401k. So when you start to hire people, you could pitch the idea of having a solo 401k as well. I know that's very easily sellable. And of course, we're always happy to jump on any calls with you and any of your contract workers to help them get set up. Okay.
Did it? Okay. Is this recording? Yes.
A question
Trees.
from, you got it. Go for it.
Sorry. I think it was already
Yeah, we have a few
answered.
duplicates.
Yep. No problem.
I'll take Rich and Rachel. So moving funds from a standard solo 401k to a Roth 401k, are those funds considered part of my total gross income for the year since it was pre-tax in the standard 401k? So yes, you guys will be paying taxes on the conversion. I think it does fall on your personal taxes. Of course, work with your CPA. You'll need to do a 1099-R that needs to be submitted by January 31st. You can do your in-plan conversion, whenever you want. You don't have to do that form immediately. You just have to do it by the following year. So that's what's really important. The year that you've done your conversion, if you've done it in 2022, it's going to be reported on your 2022 taxes.
All right. Mark Dennis's answered, as well as Patrice's, if you can. Gardy, what if you trade under your coloration name? Assuming you mean corporation name. I'm just going to assume, because we were talking about day trading. Again, it all depends on how you're being taxed. So if you're running that income and paying yourself through your corporation, you'll use the income you're paying yourself, not what the business makes necessarily. If you're a W-2, you're using your W-2 income to calculate your contributions. So again, it really depends on how you're being taxed. Gardy, if you're not already a solo 401k client, we'd love to set up a time and ask some more questions, just one-on-one, learn a little bit more about you, kind of what you're hoping to accomplish. And then we can see if it would be a good fit or not. But love to set up a time. You can reach out anytime.
I'm going to post, this is the schedule for anyone that's not a client. If you go to solo401k.com/consult, you can jump on our schedule. And then Patricia, I see your question here about what is a 1099-R for? It's for all kinds of things. So the 1099-R could be used for in-plan conversions when you're moving from one tax classification to another within your plan. Maybe you did a rollover. I'm sure a lot of you guys did rollovers from a previous 401k, a traditional IRA, any other qualified retirement account. But the reason why maybe you're not thinking about it because your releasing custodian, they took care of that 1099-R for you. They mailed you a copy, but they're the ones that submitted it to the IRS. I do know we have an article all about different reasons you would need a 1099-R, so I'll pull that for you right now.
All right. I'm not sure if we already got to this one. Come on. We did. Great.
I have a question here from Victor. I'll pull in.
Is it the W-2?
Yeah.
I have a W-2 and a 1099. How is the 15.3% employment tax handled? Luana?
Ooh, that is a question for your CPA. I'm not quite sure about that one.
Yeah.
It's going to be on both incomes, but when it comes to W-2 and 1099, your taxes look differently. So of course, work with your CPA on that.
Awesome, Gardy. Client with a million questions as I grow. Fantastic. Happy to help.
We love that. And remember, everyone with these great questions, join us for our webinars every Monday at 1 p.m. Eastern. We do a live Q&A where we can take all these great questions for you. We love to be on there. The more people that are on there makes it more fun and interactive. So absolutely join us every Monday, 1 p.m. in our Facebook group.
All right, I'm refreshing Facebook every couple of seconds. I'm not seeing any more questions come in.
I see a question here from Brian. Okay, Brian, could it make sense to pay yourself to put money in a Roth if your business would have a net loss? Would that become a personal deduction? Well, remember, so the only way to make a Roth contribution, any kind of contribution, is that you have to be compensated from your business. So if you're just showing a net loss and you're not compensating yourself, then you can't make a contribution. Also, Brian, if your company is showing a loss, maybe you're thinking about still paying yourself, that too is something you want to talk to your CPA, because you have to justify paying yourself as well. Owning your business could be tough. You should still be able to make a salary, right? You would think that, but you have to go over the implications from the IRS with your CPA. So great question. Of course, I know we're deferring a lot of this to your CPA because we don't give out tax advice. Happy to give educational learning experiences, but your CPA is going to give you your final word. I use my CPA for all of this stuff.
All right, Patricia had another. So if I transfer my SEP from TD Ameritrade, they did the 1099-R. Correct. Yeah, it's the releasing custodian will typically do 2 copies. They'll send one to the IRS and one to you. If you didn't get that copy, you may be able to reach out to TD and get it. But again, the IRS already has one, so no problem.
And Patricia, if you did it this year, don't be nervous if you don't get it at the end of the year. I know when I did my rollover, I didn't get it till about February. So if towards the middle and February, guys, if you haven't gotten any 1099-Rs from your releasing custodians that you did rollovers with, reach out to them, because you absolutely want to make sure that that was done correctly, because there should be $0 in taxable income or taxable event. We'll take a few more questions. And remember, you could bring all those questions also to the live Q&A on Mondays. Happy to take any questions. We'd love to focus on, deductions right now for these questions. So if you have other great questions, join us on Monday. Looks like it's getting a little quiet. So Josh, I know we do have an upcoming webinar for next month. Do you want to tell us a little bit about what we're going to do?
We do. Yeah, we're going to be doing a participant loan webinar I know Alana and I have definitely been getting, I'd say, bombarded with participant loan questions. I think with all the kind of changes and life stuff going on, people need access to their funds. So participant loan webinar, October 25th. Alana and I will be putting it on. So hopefully, and gladly looking forward to talking to you guys then as well. Q&A, like Alana brought up, we're on every Monday. So if you guys do have quick questions, things like that, please join us. Facebook, Self-Directed Heroes, right here on Crowdcast as well. Rich and Rachel, yes, live Q&A every Monday, 1 o'clock Eastern time. Thank you guys so much. Manmohan, thank you for your support. We appreciate you. And thanks for joining us, guys.
Okay, yeah, we'll wrap it up. We'll see you guys next time for the next webinar, and definitely for that live Q&A as well. I'll post the Q&A right into this chat box as soon as I sign out, just because I can't pull it at the same time. So you guys have the Crowdcast link in case you don't like Facebook. We understand if some people don't like Facebook, that's okay. We always have Crowdcast available as well. But if you want to ask questions and we're not around, jump into Facebook, jump into our live chat, use all the resources. So thank you so much. Thank you, Josh, for doing this with me. It's always nice to have my other counterpart with me. So awesome. Thank you, guys. Have a great night.
Bye, guys.